Welcome to DigitHustler.com. In this video, we are going to be discussing the MACD indicator. Now, the MACD indicator is an extremely popular indicator because it's used very well with most traders. And remember, you should never just use one indicator. Always use in conjunction with other reliable indicators, such as the RSI, MA cross, or Bollinger Bands. Now, the MACD indicator stands for Moving Average Convergence Divergence. Okay? So, let's talk about the formula. The formula is calculated by subtracting the 26-period EMA. EMA stands for Exponential Moving Average. From the 12-period EMA. The result is the MACD line. Okay? So, if you're looking at this indicator, you see this blue line I highlighted right here. Blue line is the MACD line. Okay? Okay, so a 9-day EMA of the MACD is called the signal line. Okay? Now, the signal line, if you look over here, I highlighted in red. The red line is the signal line. Okay? You see the blue line, the MACD line, and the red line is the signal line. Okay, so the signal line is then plotted on top of the MACD line, and which this will function as a trigger to go long or go short. Okay, so let me show you how this works. Okay. Now, an easier way I usually explain it is I consider the blue line, the MACD line, is the bull. Okay, and the red line, which is the signal line, is the bear. Okay. Now, the bull and the bear are constantly fighting. You know, the bear's constantly fighting to push price down and the momentum down, and the bull's constantly fighting to push the price up and shoot the momentum up. Okay, so if you're looking at this indicator right now, what we're looking for is buy and sell points. Okay, so let's look at the top. Okay, now when you see the signal line, which is the red line, go on top of the blue line, that's a signal to go short, to sell. Okay, and then when you see the blue line go above the red line, which is the MACD going above the signal line, the red line, that's a signal to go long. Okay, so let me highlight this again for you. So right here, we would go long. Right here, we would go short. Then right here, we would go long. Okay, I'll put the X as where we go long. And the circle is where we go short. Okay. And if you look above, you could see this correlates with the price action above. Okay. Sell, long, sell. Okay. So again, we would go long here because we see the red line go underneath this, which is the red line, which is the signal line, go underneath the MACD line. Okay. Then again, right here, the signal line, the red line, goes above the MACD line, which is the blue line. That's a signal to go short. Okay. So that's a very simple way to read it. Now, there's a few other things you will need to learn as well. Okay, we could also plot out the momentum, what directions the momentum is it building up, is it losing its support. So I'll show you how to do that right now. So we're going to talk about the histogram. To understand the MACD histogram, how it works is the 9-day EMA, exponential moving average, is plotted alongside to act as a signal line to identify turns in the indicator. The MACD histogram represents the difference between the MACD and its 9-day EMA, the signal line. The histogram is positive when MACD is above its 9-day EMA, and it's negative when the MACD is below its 9-day EMA. So I'm going to simplify this to you to show you how you should be using this, okay? So I'm just going to erase some of these callouts I made. So the histogram is this area right here where you see the green waves on top and the red waves on bottom. These are bars, okay? As you can see, I'm highlighting it with my cursor right now. Okay, this is the histogram. Now, the best way to read the histogram, let's look at right here where I'm highlighting right here. Okay, as you can see on the left side of this histogram, it's a dark green. On the right side, it's very light. So what this means is the momentum, right? It kept climbing. Okay, so each one kept getting higher and higher and higher. Okay, until it started to lose some steam. Okay, then it started to roll back down. Okay, when it started losing its momentum, the lighter side shows that it's losing it. Okay, it's decreasing. Okay, same thing on the bottom side where you see the red part of the histogram. It's getting lower. It continues to stay dark. The bars are getting darker and deeper as it climbs lower. Then as it reverses and starts to increase again, you see it starts to turn light. Okay. Now, one thing to look at, if you're looking at the histogram, I'm going to circle this area right here. Okay, where we see it came from a negative part of the MACD, where it's underneath the center right here. Okay. Now, where I circled, you will see it come from the bottom side to the upside. We look for this middle point right here. I'm marking with an X. This is when the signal line gets underneath the MACD line, which is right above it. Okay. You look for these two marks, and what this will indicate is a time to go long. Okay, and it's the opposite when you're dealing with the we're going into the negative side. Okay, so let's look right here. We see the signal line climb above the MACD line, the red line go above the blue line. Okay, we see that right here. I just marked with an X. We also see it right below it in the histogram, where it came from the positive side, and now it's shifting to the downside. Okay, shifting to the negative side. We see the histogram, that one little spot where they both connect is where it's going to cross over from the positive to the negative. Okay, so that would be an indication to go short, to sell. Okay, now another thing you could get a lot of use out of this is, if you see right here, you could draw trend lines. Okay, you could see where I draw right here, we see higher highs in the momentum, right? But we don't necessarily see as strong as support for that, right? Like, let's see right here. Okay, it kind of has support right here. We weren't getting higher lows. Okay. Same thing on the bottom side. You could see right here, we see the momentum's decreasing by looking for lower lows. Okay, just as if you're reading it in a price action, or if you're reading on the RSI, it's similar with the MACD. The MACD is a little bit different. I know it's confusing because this indicator could be used for a variety of different things. But the biggest things you can be taking from this is the reversal signals. Okay, the main thing you have to worry about is looking for those crossover points where the signal line either climbs on top or below the MACD line. Okay, if it goes on top of the MACD line, that's a signal to go short. If it goes below the MACD line, that's a signal to go long. So right now, where we're looking at a Bitcoin chart, we're looking at the daily time frame. Okay, and right now, what do you see is happening on the MACD. We are seeing what seems to be forming as the signal line is about to go underneath the MACD line. We're about to see a crossover, okay? And we see that again on the histogram. Look what you see. We see all this negative momentum building, and then it started reversing, and now it's starting to climb and switching over to the positive side right here. And it's also having crossover right here. So what does this mean? This means to go long, okay? And of course, you always use this with other indicators and a variety of other tools you will learn as a trader when you're looking for patterns in the price action. Okay, but MACD is a very useful tool. I always check it with all my trades, so this is one of my most popular tools I use as a trader. I love the MACD indicator. So that just about wraps it up for this video. Don't forget to check out our site at digitalhustler.com and get in the game and start trading today. Thank you.